Bismillahirrahmanirrahim. What is up, guys? My name is Hassan and welcome back, everyone. Today I'm going to give you guys another update on my semi-monthly or monthly update on my Robinhood portfolio, my dividend tracking sheet, and some of the dividends I've been getting for the last month. We're also going to be talking about one of my investing philosophies, these 3 simple rules that we're going to go a little bit more in depth in. Currently, my Robinhood portfolio is at $34,800 or $35,000. And we can see that the market is live because we can see the price changing every few seconds. And what they're currently offering me for my portfolio is around $34,800. But tomorrow they might even offer me a little bit higher. So for one day, I'm down about 1.5%. If we look at it for 1 week, I'm down around 1.9%. And then if we look at it for 1 month, I'm down 13%. For 3 months, I'm down only 1% or 1.7%. And this is how real investing looks like. It goes up for a certain period of time, and then it goes down, and then goes up, and then it goes down. As long as your trend is up, as long as you're buying these solid, high quality companies, no matter what the market is, eventually your companies are going to do well. So currently at all time, I gained around 2% or $700. And this is excluding the dividends that I've been getting monthly. So I do these updates every single month, guys. Subscribe to my channel to see this progress throughout the years, and I also show my other portfolios. And if you guys take a look on the right, and these are some of the companies that I have. I consider most of these companies high quality companies. These companies are going to do well no matter what the market condition is, or at least in the long run it will do well. Let's take a look at one example. Even though AMD is down massive for the year, around 28%, but if you look at it for 5 years, it's up massively. It's up 500%. And this is what I'm talking about. Even though we might be down on certain companies for a short period of time, but in the long run, our trend should be up. Now I want to take you guys to one of my investing strategy, which is these 3 simple rules. Buy high quality companies, don't overpay, and do nothing. And that's it. And if you can follow these 3 simple these 3 simple rules, you are guaranteed or almost guaranteed do well in the stock market, because we know that the overall trend of the stock market is up. Let's quickly take a look at the S&P 500. If you look at it for 5 years, if you look at it for MAC, you can see this trend of the S&P 500. It is up massively, slow and steady. It is increasing in value. So even the last 5 years is up 55%. Overall trend is up. That's why it is so important that you guys follow these 3 simple investing rules to achieve this long goal. We're going to show you guys an example, right? So what do I mean by high quality companies? And if we take a look at my portfolio, I'm going to show you one example. We're going to take a look at CRM, Salesforce. And currently I have 6.7 shares. So I'm not a person who only talk about investing. I actually do it. I actually show you guys my portfolio. Currently I have $1,000 in it, and I'm down. And I'm not afraid to show you guys when I'm down. I'm down almost 30% or 29%. But I know in the long run, just like how this trend is showing you us, in the long run, I will be up on Salesforce. So I'm going to show you guys why I think Salesforce is a high quality company. So we go to Seeking Alpha. Use this website for your analysis. It's great. If we scroll down, we can look at their annual revenue. In 2018, they made $10.5 billion in revenue. Fast forward to 2022, they made $26 billion, and then they expect in 2024, $35 billion. So what makes a high quality company is that their revenue is increasing year after year. Not only is their revenue increasing, but their profits have to be increasing. So let's take a look at their profits. So we're going to go to financials, look at income statement. So the income statement shows us if a company is making money or not, and it helps us decide if we want to buy into the company or not. So again, if we take a look at their revenue, we can see the revenue increasing nicely year after year. But what about their profit? And we can see that too. Their profits is also increasing year after year. And this is what I consider a high quality company. So the next bullet that we're going to talk about is don't overpay. Right now, currently, Salesforce is at $154. If you look at it for 5 years, at one point, this company was at $300. Now it's almost half the price. So this is what I'm talking about. that this is a solid company. Year after year, the company is growing in revenue. They're making more profits, but the value of the company in terms of price of the company went down. So this is what I mean by don't overpay. For the most part, compared to its all-time high, we are getting a good deal. In 2021, they were at all-time high, but a year later, the fundamentals are a lot better and we're getting it for a cheaper price. And this is what I call do not overpay. And the next one is simply do nothing. And 5 years ago, it was at $94, $100. Now it's at $154. If you look at it for the 10-year chart, it was at 42. Comparison to 10 years ago, it's currently up to $154. 3 simple rules: buy high quality company, don't overpay, and do nothing. And all my companies, or at least for the most part, a lot of them are high quality companies, or at least that's what I consider them to be. So now we're going to show you guys some of my holdings. We're going to go to account, and you can see the value of my portfolio is changing second by second. That means that the market is live. Currently it's at $35,000. Even though I'm down for the year, I'm not worried because my companies are solid. If you compare it to my previous video, you can see that I added some shares here and there, little fractional shares. Now I have 43 shares, 14 shares, 15.5 shares of NVIDIA. I have Contour Brand, Johnson & Johnson, Broadcom, Microsoft, Pfizer, Grindroid Shipping, Airbnb, Tapestry, Calaris. I do a little swing trade on this all the time. Cisco, Medifast, NetApp, Escalade, HP, and so on. These are some of my 10-15 holdings that I have. And if you guys want, you guys do more in-depth research on it to see if these companies are right for your portfolio. Remember, make sure you guys check out the quick disclaimer in the description below. So these are the companies that I'm holding, and now I'm going to take you guys to my monthly dividend tracking sheet. So again, this is my monthly dividend tracking sheet where I track how much my Robinhood portfolio is generating me in cash income month after month. We can see $100, 83, 70, 60, 45, and then it changes to like 117 and so on. But the overall trend of my portfolio in a month in terms of monthly basis income is increasing month after month. So the last time I did my portfolio for July, I made $18.43. So let's now add for the month of August 2022, I made $64.23. And we can see it here, and it repopulated. So I made $64.23 for the month of August. If you guys haven't made one of these charts, make sure you guys do so. It helps you track your progress and it motivates you to continue to invest even in this downturn market. Key here is to buy into solid, high quality companies and to have a specific strategy, to have a specific investing philosophy. So again, if you guys made it this far, make sure you guys hit the like button, hit the subscribe button, and it helps my channel grow. I make these monthly updates or semi-monthly updates to show you guys my progress, how my portfolio increases month after month, or at least in terms of dividend payments and the companies I'm invested in. So again, we're going to take you guys back to my Robinhood portfolio. You guys can see some of my holdings right here. So we're going to cover a question before we end this. One of the question is, what do I think of SCHD and why don't I hold it in my portfolio? And this is a very important question, or very good question, because I know a lot of you guys out there are a big fan of SCHD. I'm also a big fan. So why don't I hold it? I think the SCHD is a phenomenal ETF. It's one of the best ETFs out there that pays a monthly dividend. I just simply like more control. If we take a look at the SCHD, we can see their holdings, right? So currently it's at $71, and these are the top 10 holdings of SCHD, like Texas Instrument, Pepsi, Coca-Cola, Home Depot, Cisco, Amgen, Merck, Broadcom, Pfizer, International, IBM. If you look closely, I have Texas Instrument, I have Cisco, I used to have Merck, I made a swing trade for it, made profit on it. I have Broadcom, I have Pfizer. Even though I'm not holding the actual SCHD ETF, I have the companies within the ETF to have a little bit more control over it, and it also do with ethical investing because some companies are halal, some companies are not. As always, guys, if you guys made it this far, hit the like button, hit the subscribe button. As always, thank you. We're going to see you guys next time. Bye, everyone.